Hey everyone, today I'm going to give you four hot stocks for what I perceive to be a bust out of the market. The early part of July is usually the hottest part of a summer rally, if a summer rally is occurring. And I think the CPI comes out on July 12th, and that's going to come out very low in comparison to what it has been. And I think that's going to be a spur to the market. And I think I want to get in on some individual stocks. Although I like to trade in and out with TQQQQ, which is a triple leverage fund on the QQQ, the 100 largest stocks on the NASDAQ. I like to do that during uncertain times. To me, these times look less and less uncertain. It looks like we have a breakout rally that's going to go for a while, and it may just continue to the end of the year, depending on what inflation does. It looks like inflation is on a good course for a downturn. We know that the July 12th report is going to be low. It's going to be in the threes, possibly in the twos, simply because of the base effects. The base effect is that it was up 1.2% last June, and the higher it was the last June, the more that helps your current inflation report a year later. It sounds weird, I know, but literally how much it rose last year, you can almost subtract that off the inflation that's going on now. They call it base effects. And I think we're going to have a huge one. We're going to have a low CPI number, and that's going to propel the stocks forward. So I want to give you four hot stocks. The fourth on the list is ST Microelectronics. Its symbol is STM. And I think of them as a semiconductor company that makes practical semiconductors, particularly for cars. Cars are selling much better than they were. A lot of electric cars, man, do electric cars use a lot of semiconductors or what? STM is a $45 billion company. As you look at the chart, you can see that it's sort of at a stage of decision whether it's going to go up or down, but I think the economic factors are going to carry it higher. It's well above its 20-day moving average. Its price is around $50. Its value is around $68. It has a low forward price to earnings of only 12. And its earnings growth rate is 24%. So we have a very solid company here with a good chart in a good area. And I'm just focusing on technology. I mean, we can look at gold and oil and this and that and the other thing. I've gotten to where I just want to focus on technology. I think that's where the action is. I think that's where the long-term trend is. I actually think being in other areas, with rare exceptions, is kind of a waste of time. I mean, you can get in on them when they're booming, but I don't see any other area that's really booming. So I'm focusing on technology for now and for the foreseeable future. Everybody's financial situation is different. Everybody's different. And these are the stocks that I'm considering taking a position in, because when the market really explodes higher, you can trade in and out of it, but if it's actually an explosive breakout, you make more money just sticking with stocks and staying with them. And these are four companies that are all undervalued. That's a very important thing. They're breaking out and they're still undervalued. If the market continues with this breakout trend, I'm going to make a lot more money with these four stocks than I would have if I had traded in and out with the same money. So it's not financial advice because I don't know your personal situation, but these are my personal thoughts and beliefs. The next stock is Broadcom, whose symbol is AVGO. And this is a stalwart, basic, strong company that supported the internet from the beginning. Its symbol is AVGO, and it's a large market capitalization of 362 billion. It even pays a 2% dividend, which isn't all that common with technology companies. Right now, the price is around $876. Its value is around $893, so it's still somewhat undervalued. Its PE is 21, which isn't bad for a technology company, and its earnings growth rate is about 22%. It has a very positive chart, and you can see that it's breaking out. And it just seems like a very solid company that I see recommended over and over when I screen stocks, and I just can't ignore it any longer. You know, I kind of ignored it because, you know, it's such an old stalwart. They make infrastructure software, and they're semiconductor companies that makes chips complex enough for artificial intelligence. So you get in on that trend somewhat too. So I think it's a very decent stock. You can see as you look at the chart, the orange line in the middle is the 20-day moving average, which is above, and it's within the Bollinger Bands. The Bollinger Bands are where the price is expected to fall with 95% certainty. And it's within that. So I think it's taken a bit of a breather, and it's deciding whether it's going to go up. And just the economic data we have coming out in the early part of July, I think is going to propel this higher. The next stock that I like and am considering and will most probably go into is also another semiconductor company. It's ON Semiconductor, and its price is around $97. Its value is about $118. So for a technology company, it has a relatively low price to earnings of only 20, which is low for a technology company. And its earnings growth rate is about 23%. So you have excellent growth. You've got a reasonable PE, and it's trading below value. When you look at the chart, this stock seems to be having the most breakout of all of them. And to me, it looks like it's going to continue onward. It's just been a stalwart whenever I put it into my portfolio, and it usually goes forward. It tends to follow the market, but it usually does much better than the market, and that's why I keep returning to it over and over again. My favorite of all these four stocks is Super Microcomputer, whose symbol is SMCI. And they make servers that are complex enough to handle artificial intelligence. And they're a small company. They're only 13 billion, which is small relatively compared to these other companies. And its price now is $249, and its value is about $309. So it's still a buy as much as it's gone up, and it has skyrocketed up. But its price to earnings is still only 23, which is reasonable for a technology company. And its earnings growth rate is the outstanding part of it. It's 37%. And when you have a market breakout, when it's bullish, I find that the earnings growth rate is more important than the PE, at least in my world. And it's 37%. So I think Super Microcomputer is going to continue its breakout ways. Looking at the chart, the 3-month chart, it's at a decision point as to whether it's going to continue the breakout, which many stocks are doing. They're kind of in that decision phase. But I actually just see it coming back to earth a little bit after having a massive breakout. but I expect it to continue on with its breakout ways, because that is its history, and it always does much better than you think it's going to do. So I'm very pleased with this stock. Thanks for listening and watching. Be sure to check back as I tell you my progress on trading the Qs. I recommend QQQ if you don't have the time to watch it every second. If you do the triple Qs and you're planning to trade with it, you got to be watching that every second, because it will explode upwards and downwards. Whereas the QQQ, that's just a good long-term play. I mean, you could leave it in there and swing trade it. You could long-term trade it. 5 years from now, you're going to be very glad, probably, that you put QQQ into your world. And for those that don't have it in their portfolio, I feel sorry for them, because I think technology is where it's at, and that's where the money's going to be at, and that's what I'm dedicating this channel to. So thanks a lot for listening and watching, and I'll hope to see you in the next one.